Iowa State University Extension economist Chad Hart is my guest this week. There are less than 2 weeks left to make final decisions on 2021 farm revenue insurance programs. While market prices for corn and soybeans are the highest they've been in years, producers still have the option to add extra revenue insurance before March 15th. I asked Chad about that and got his thoughts on price movements in corn and soybeans as well.
Well, the famous date here is, if you're a farmer, the 15th of the month is always a big thing for you. Taxes on April 15th, crop insurance deadline March 15th. And the idea is the crop insurance deadline is big this year, not only because you need to have your insurance signed up for by then, but it's also farm bill decision time. So if you're looking to, for ARC versus PLC, you want to get into that FSA office before March 15th to make sure you've signed up for that program.
Chad, it really is a busy time for producers right now. What's the most exciting thing for you to track this time of year?
Well, I think right now, I would say this year, it has been the price recovery that we've seen over the past 6 months and watching how that has impacted the farmers that I do get to speak to. The idea is that, throughout last spring and early summer, talking to farmers, it was, for lack of a better term, a drag. The idea is that they saw their prices were down, COVID was hitting them. It was not a good point to be in within crop agriculture. Since then, we've seen dramatic improvements in prices, and you can see the excitement in the farmers as they want to get out and plant. They are excited about the market opportunities that they see out there. And so that has been exciting to watch over the past few months. And I think as we go forward, it will be interesting because, as you mentioned, the idea is that, the acreage decision this spring is going to be incredibly vital to how the markets continue this run or not.
Yeah, let's talk about that run because some analysts are saying this grain rally could be losing steam. So I'd like to know, where are you with that? And do you think there's much incentive for prices to rally higher in the short term?
I think there's the opportunity for that to happen, but it's not necessarily the case that there's another leg up here. If you think about what we have seen over the past 6 months, it has been a 50 to 60% increase in prices over a 6-month period. That's an incredible bull run within the market. Now, the reason I say that there's still the potential to go higher is that we have tightened those ending stocks down to levels that typically indicate if we continue to see more demand out there, and especially in this case, international demand, we could ratchet that tightness down even further and put another leg up on these prices. That said, though, this is also the period of time when we know export sales tend to die off as South America comes online. So it really is this balancing act right now that the market is sort of, I'll call it flip-flopping back and forth on. The idea is we're watching South America to see how quickly that harvest can come in and how many export sales maybe move that direction, because that's going to determine whether we do get that next step up in prices over the next few weeks.
Let's get a question about South America since you touched on it. Brazil's harvest over 25%, safrinha corn planting around 40%. Thoughts on those numbers?
Well, that's the deal. When we look, we know that they are running behind. They have definitely some challenges there. We've been hearing anecdotally tales about, beans coming out of the field wetter than usual, that, they're having some quality issues as they look out there, along with delayed planting as you're looking here. And so all of this is helping stack up, like I say, some of that demand that normally would have shifted from the U.S. down to South America. Nope, it's staying up here for a little longer because of those production and quality issues that are occurring in South America right now.
And as we look down the line, big USDA report coming out at the end of the month. And I've been asking analysts the last couple of weeks to give us a preview of what we may see in that report. Would love to hear your thoughts.
Well, that's the deal. What USDA laid out for us was 92 million acres on the corn side, about 90 on the beans. And probably the biggest thing I'm watching for now is, okay, that's what we're, USDA was thinking. We've had that issue of, the real cold snap, especially hitting the southern plains. And what I'm watching here is winter wheat kill. How many acres open up additionally now that we've had that cold snap that could move into corn and soybean production? That to me is still an open question. I think that's what makes the end of the month very exciting here, in that we could have a few more acres in play than we've originally thought here.
And finally, Chad, with planting getting underway very, very soon, it's a good time to be thinking about your marketing for the year ahead. What advice do you have for us?
Oh yeah, no, when I'm looking right now, I like to tell folks now's the perfect time to think about marketing, because you're not out in the field yet. You're not planting. One of the biggest issues I think with crop marketing is, when do we tend to see our best prices? Well, when we're at our busiest, when we're out there in the fields working to get the crop planted and underway. So the more marketing planning we can do today, the more likely we're able to take advantage of those opportunities that likely come in a month or two. That's why, you often hear a lot of us ag economists talking about having a marketing plan and being prepared for the year upcoming. That way you don't have to spend a lot of time necessarily thinking about your marketing. You've already thought about it. You've got that plan. You just need to put that plan in place when you get to that point in time.